Moving from California to Florida changes your taxes, but not on the day the moving truck arrives. Florida imposes no personal income tax. That prohibition sits in Article VII, Section 5 of the Florida Constitution. California taxes its residents on worldwide income. Non-residents are taxed only on California source income. So the real question is when your California residency actually ends. Revenue and Taxation Code Section 17014 defines a resident as someone in the state for other than a temporary or transitory purpose, and anyone domiciled in California who is outside it temporarily. Domicile continues until a new one replaces it. You must abandon California and establish Florida together. Franchise Tax Board Publication 1031 sets out the closest connections analysis. Where you spend your days, where your spouse and children live, where your home is, where you vote, bank, and register your vehicles. No single factor decides the question. Now the part that surprises people. Some income stays California taxable after you leave. Wages for days you physically work in California. Rent from a California property you kept. Gain on selling California real property, with withholding at 3 1/3% on Form 593. Equity compensation, allocated by workdays from the grant date to the vesting date. Installment payments on a sale that closed before the move. There is one significant protection running the other way. Federal law, for United States Code Section 114, provides that no state may tax the retirement income of a person who is not its resident or domiciliary. So a California career funding a Florida retirement produces distributions California cannot reach, provided you are genuinely a Florida resident. In the move year, you file Form 540NR as a part-year resident. California computes an effective rate using your total income, then applies that rate to the California portion. Florida requires no personal return at all. Build the record early. File the declaration of domicile under Florida Statute Section 222.17. Apply for the Florida homestead exemption. Keep a day count. The record you create in the first 90 days is the record the Franchise Tax Board reads years later. This is educational information and not advice for your particular situation. Tax Expert Today.